We are following fresh data on the economy this morning. A new report from the Bureau of Labor Statistics shows the wholesale prices increased 0.3% for the month of July. So this comes a day after the Consumer Price Index report showed prices rose by 0.2% last month. Hope King is joining us now in Studio 57. She's a senior business reporter for Axios. So this is the price that the wholesalers pay, and then they sell to the retailer, who then sells to us. So the thinking is, if the wholesalers pay more, it may trickle down to us. Now my question to you is, I know that the Fed likes to look at this number, but is this number an important number or not?
I mean, it is to tell the bigger picture story. And I know we talk every month when these numbers come out, and we look at the direction. And we were talking before, we're on air just now, that direction is much more important on the bigger scale than it is sort of month to month. But the month to month informs the line, right? So we need to follow the dots to see where the line is going.
Because I'm thinking if the wholesalers are spending a little bit more now, I'm probably not going to see that for probably months down the line. So the question to you is this moving in a good direction?
It is moving in the right direction. And then to your point, it all depends if they want to pass on those really cost savings that they're getting to us, which we're going to see in the profits. And if those margins are increasing, that they're giving us a little bit. They're not giving us much of a discount, right, to what they're paying.
How does this affect me at home?
Yeah, well, just as we just talked about, right? So if the wholesalers are getting discounts and these companies are able to pass that on to us, that's great. That means that our overall consumer inflation is going to trend downward.
So lower prices at the supermarket.
Absolutely, exactly. So again, we want to see this continue to go down. And with the inflation number that we also just got this week as well, it looks like we're getting to that target 2% inflation number the Fed wants.
So the challenge that has been sort of happening all along is that we, the consumer, are willing to pay whatever, right? So they don't necessarily have to drop the prices because we complain about it, but some people still have that extra buffer. So how does the Fed use this number? Because if we're willing to pay, then inflation is going to keep going up.
Well, that's exactly right. The demand is really where the Fed wants to sort of harness it down, rein it down. But the jobs market is still strong. And I know, earlier this week I reported on our credit card balances are still high. And then to your point earlier, our savings are still sort of there for a lot of us, not all of us, but we still have that excess pandemic savings in our banks. And so we're feeling confident. Consumer confidence numbers have been going up. So all of the consumer trends are pointing in the direction of demand is still there, whereas prices are going down. And that's a great equation for the economy right now.
How do you think that impacts, this new data impact the Federal Reserve's decision to raise interest rates or not?
Well, if you ask traders, they're already pricing in a pause in hikes and maybe even no more hikes for the rest of their, so that's what they're betting on. If you look at where the trades are, based on the inflation numbers and based on today's PPI.
I mean, I don't know much about this. I know everything from people like you sitting here, but it seems like that's quite optimistic.
It is very optimistic, and things could change. And I think the one thing that I always like to say around this time of the year is it's back to school. It's holiday shopping season. Are any of us slowing down?
Absolutely not.
Right.
Guilty.
Right. So that demand is still going to be there. And again, as long as those savings are there and our bank accounts that we can cover the expenses and balances, then for now, it seems like traders are saying that, yes, optimistically, there may be no more hikes, and there may actually be cuts in 2024.
Okay.
That would be really interesting, and it would be great for housing and a lot of other industries. Let me ask you about some other numbers that came out. We also got the weekly claims for unemployment insurance yesterday. Last week's initial claims were up 21,000 from the previous week. What does that mean? Is that good or bad? Or
so again, this is another data point in the overall line and the shape of that line that we're looking at. And at least a lot of economists are looking at the trends on that bigger level. And one actually says to look at something a little bit more reliable. And he says that it's actually, let's look at the number of people that are actually collecting benefits. And that number is actually trending down. And so that's a better indication of where layoffs are at this point. And we know that they were very concentrated in the technology sector, in the financial sector earlier on, with interest rates really impacting them. But services, continues to be where we're spending our money. We're traveling, we're going out to eat. And so labor there is still strong. Demand for labor there is still strong. And so this is sort of what he's sort of pointing to.
Interesting. So the number, this 21,000, that's telling the story of who?
So this is on a weekly basis, this numbers comes out, right? And it's jobless benefit claims. And this right now, to your point, is the highest level it's been since July. And so that reflects a little bit of the turmoil in certain areas of the economy, but not overall, with the jobs number that we come out every month with.
Recession less likely?
Well, we're, again, coming to the end of the year. We got less time for a recession to happen in 2023. So a lot of people, again, if they're saying that the Fed might not even hike anymore, then that also lessens the likelihood that we're going to get a recession in the next couple of months.
I'm good with that.
Hope King bringing us the hope. Thank you very much.